Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez. I appreciate everybody for tuning in today. Should be an interesting episode. The main topic will be looking at a couple different patterns, one of which has a bullish bias, the other of which has a bearish bias, to see if we can determine which is the best suited pattern for the recent price action in Bitcoin. So I thank, again, everybody for providing some feedback on the Peter Bollock SAR. Has been a bunch of really good feedback that I've been getting messages from people who have already started to implement it in their trading. Sounds like somebody is working on developing a bot for it, and I am definitely excited to hear from people who are able to put that to work successfully, especially this soon on. It was just released, so recently, and we have been stuck in a range this whole time. So hearing those good words and positive feedback is always really appreciated. And then there is at least one bug that we're working on. I noticed that Sam mentioned in the chat that there's a bug, and I'm not sure which one he's talking about. If there is more than one, I'm not sure. The one that I came across a couple days ago was a bug that occurred if the same candle created an extreme point in both directions. So an extreme point is the lowest low of a downtrend or the highest high of an uptrend. And when you get those Darth Maul type of candles, or a big fake out candle with a huge body in either the opposite direction, what will happen is it will create an extreme point for the both sides. Basically, it'll be a bullish extreme point and a bearish extreme point in the same candle, and that has led to some issues which could cause for a setup to be mislabeled, and it could also cause for then the trigger to be potentially missed. So Casey is aware of that. He is going to be working on that. We ran into the same issue with the Lucid SAR, and he came up with a really good solution that sounds like there won't be any reason why that won't work this time. We just spoke briefly this afternoon, and he is a very busy person, and it sounds like he's got the information he needs to move forward, and we'll be excited to go ahead and get that ironed out. If there are anything else that people run into, definitely feel free to shoot me a message on the chat via Twitter or via Telegram, or you can leave a comment on TradingView. Okay, with that being said, let's go ahead. Oh, well, we can't dive into the charts without talking about my St. Louis Cardinals. Oh my gosh, what a game last night. We come from behind. We're elimination game at home, late innings, down a run, and Yadier Molina, just the heart and soul of the Cardinals organization over the last 10 years since Albert Pujols got sent out west. He has been the face of the organization, and deservedly so, one of the best catchers of all time, and proving again that he is not only incredible behind the plate, but a clutch postseason hitter. I've been watching him hit and have clutch RBIs since I was in middle school, or definitely in high school for sure. And it just is, what an incredible feeling seeing him bat in the tying run, and then he hits in the go-ahead, the winning run with a sac fly to left field. So we are taking the series back to Atlanta, and we will be in the decisive game 5 tomorrow. So there is a chance that I miss the stream tomorrow. Actually, I'm almost certainly going to miss the stream tomorrow. It is supposed to be the daily coaching, the live coaching sessions with Gabriel Harbor, but I am needing to do some things to get prepared for my upcoming trip to Bali, and tomorrow afternoon was the only time I could do those, so it doesn't sound like we're going to be able to put together a show tomorrow, especially with the Cardinals in action. And I need to figure out what time that game is, but I won't do that now. Okay, so let's go ahead and look at a couple different patterns. Like I said, this one is going to be the one with the bearish bias. And then if I start with the bullish bias, everybody will probably turn out before I get to the bearish one. So let's go ahead and start with the bearish one. So you guys will have to hang tight before I get to the bullish option. And as you can see, price has potentially been fitting into another descending triangle throughout this consolidation. with a flat base and what looks like at this point another lower high. There are definitely good reasons to say this is a descending triangle, and that price is going lower if we are able to confirm this pattern. And if we do confirm this pattern, I would definitely agree that prices are going lower. As it stands right now, I will say that I am most inclined to label this as a Wyckoff accumulation. It looks like a much better fit to me for a number of reasons. So let's go ahead and go through. That being said, I will still be keeping this in the back of my mind in case the accumulation doesn't continue going through the next few steps from here, which are the absolute most important steps. So the first thing that I do not love about this pattern, looks like I forgot to get myself some water. Let's see how far we can make it, is this top boundary line. I was looking at this as a potential descending triangle before this last move, and like I said, I still am, but I don't like it like this. It's pretty darn generous. You have to use the wicks as the top of the boundary, and that gives you 1, 2, 3 touch points, which it looked a whole heck of a lot better before this. To me, I'm inclined to say that this broke through the bearish trend line because I was drawing it like this. So this is what I was looking at. Now here we are connecting to closes, and we've got like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles that touch it compared to 3 wicks. That really makes me think that this is the proper way to draw it. I am still okay with considering this option because it does still provide it's still an option, but it's definitely not one that I like. And if I have to pick, between the two options, I would say that I would strongly say that I prefer this line up here, right here, that has already been broken because of how many more touch points it has and how many more closes you're able to include, and how this one only just barely has the top wick that barely keeps it in. So that's where the first kind of issue that I have with calling this a descending triangle. I had no issue with it back in here. I can't remember if I talked about it on the last show. I did miss yesterday's show, so apologies for that. But 2 days ago, I can't remember if I did label, draw this out on the stream, but I was definitely looking at it a few days ago as we had these lower highs continuing to take the price down, but we still had horizontal support that I did say I thought it would be very hard for price to continue moving down from here. I reiterated that a few times. That was mainly due to the moving averages as well as the potential fractal that I was looking at, like the inverse fractal from the upside when we had an ascending triangle after a big move that failed to go anywhere. So I was expecting support to be found down in here, but I wasn't expecting this top barrier to be broken. I was kind of looking at something along these lines here. It just seemed like the market was ready to continue consolidating, and it still does look like that. But it is significant that we did break through this trend line here. So I still want to leave that trend line as it is, and it will be interesting to see if we support it on a throwback. And we can adjust it like I don't like that close outside, but that's okay. It will be interesting to see if this throws back and finds support here. If it does, then that would provide the crucial confirmation that I'd be waiting for on the Wyckoff accumulation. It's also at a very important point where it needs to find support basically at the same at this same area right in here, and we'll get into that in a minute. Next reason I'm not in love with this being a descending triangle is the volume. When you have multiple patterns that are similar, it's important to look at volume, because that can definitely help you distinguish between different patterns. Oh, no, I wanted to do that and that. I better just start saving this as default, so I don't have to do that every single time. So what I really want to see in the descending triangle, now I do remember that I talked about this in the last couple streams because we were seeing this decreasing volume. What we really want to see is that as price goes up, every time it goes up, the buying volume decreases, and then when it comes down, we want to see kind of a spike in selling volume. So everything was pretty much looking perfect here, where it was spike in selling volume. As price comes down, when price bounces, it's on less volume. Spike in selling volume. When price bounces, it's on less volume. Spike in selling volume. Price bounces, it's on less volume. And each time it gets less. Like, that's very much what I want to see for a descending triangle, where if every bounce is getting a lower high, we would want that to see on consistently lower and lower demand, and also increasing supply as price moves back down. So here we've got lower buy volume than here, and here we've got lower buy volume than here. So coming down perfectly, this was really looking, you know, at a lot of the telltale signs of a descending triangle. And now, instead of continuing this kind of decrease in buying volume as price went up, and an increase in selling volume, look what we have this time. This time we don't have a spike in selling volume, and we do have some very formidable buying volume on 3 back-to-back bars that are much bigger than any selling volume surrounding it. So as price goes up, we're seeing volume now increase. It's not increased if you compare it back to here, but it is increased if you compare it to this whole sell-off here. So that's this sell-off here is also what really made me look at this as a Wyckoff accumulation. I was looking at some charts, and it was early in the morning. I was getting ready to go on with Joe Saz on Block TV. That was yesterday morning, and I noticed that, man, this is a creek. And that's one of the most important parts of a Wyckoff accumulation pattern, is this nice creek. This you get this price, you know, testing resistance, and then just selling off, a straight sell-off down to support, and then boom, you jump the creek. So that right in here, everything changed for me, specifically right here. Because when we got this jump, now that's when I kind of recognized, oh, this was the creek. Before, it was just like we're, you know, getting mowed down in a descending triangle. So it is interesting that not only does it seem like that move broke through my top boundary, my top trend line, it also jumped the creek as far as I'm concerned. So let's go ahead and look into that. Here is the schematic that I am looking at. Hopefully everybody can see okay. Let's see if we can zoom in a little bit. Not sure if that's going to help or hurt. I think that'll be a little better. Waiting for my stream to get caught up. I'm gonna refill my water real quickly. You guys have a look at this pattern and see if you can recognize, you know, the different points in the pattern before I go ahead and break it down, and try to, you know, burn this into your memory as much as you can. Okay. So what we want to pay closest attention to now, everything back in here lines up pretty nicely, and we will go over that, but what's most important now is to pay attention to this action right in here. This pattern really starts to come to life when you jump the creek and get this first signal of strength. Everything else is just like basically looks like a signal of weakness to me anyways. Just, not like a Wyckoff signal of weakness, but basically you're like getting these lower lows, where it's like kind of eating down support. Notice how this is even lower high, how this creek, it kind of starts here and then comes down. So lower high from here, and then these lower lows, everything just looks real bad, and then boom, all of a sudden you get this jump of the creek, which provides the signal of strength, and right here is the most important point of this pattern, and that's potentially what we're trying to develop right now. Point number 12 is where Wyckoff says we should be covering all short exposure and starting to enter long. The two entries, basically point number 12 is a full stop and reversal. If you were short throughout this, then point number 12 is where you cover shorts and also go long. And then point number 14 is where you add. So these are like the only two real actionable areas of a Wyckoff. A lot of people may think Wyckoff, oh, you buy here at support, and you buy support, sell resistance, buy support, sell resistance, buy big, and then take off. No, that's not how it works. There's no way, like back in here, that you would recognize this as a Wyckoff. You just, maybe he would have had that ability, but I don't know anybody who at this point number 7 is like, hey guys, look, Wyckoff accumulation. And if they did, I wouldn't buy it for a second. I'd say, get that out of here. Okay, so now this is really where it becomes important. None of this really matters because none of it is actionable. Nothing, no entries or exits are signaled back in here as far as I'm concerned. And right here, point number 12 is where it kind of starts to become confirmed. If instead of returning back to the bottom of the trading range, back to the support lines, you create a higher low, that would give us the last point of supply, and that would be the real, like I said, where it comes to life, where you now throw back, you turn prior resistance into support, you put in a higher low, and then the thing's basically ready to take off. Then after that, you look for a higher high, the next signal of strength, and then the last point of supply at point number 14, and those are your two entries. If you don't get in there, then you are, missing out. If this pattern does develop and we're up in here, you don't buy these guys necessarily. You need to be looking at these. And I'm not telling anybody to do anything with their money. I'm just saying how this pattern is supposed to be traded. Okay, so let's go ahead and pull up this chart here. And get this guy out of here. And zoom in. Zoom in. Okay. And waiting for my stream to catch up so that I can make sure everything's looking good. We'll take a look at the chat in the meantime. It looks like we've got a little bit of input from Praetino Suderman, who says that demo account always profit, real account always lose. Small amount always profit, big amount always lose. That's my trade story. So I appreciate you sharing your story. It's not easy to, everybody loves sharing good trade stories, right? It's not easy to talk about when things don't go in your favor. And that is definitely something to give a lot of thought. Why are your demo accounts in profit? What are you doing differently? It's not luck. It's not luck of the draw. There is something obviously that's happening different when you're trading your demo account versus when you trade real money. And this is why I say time and time and time again to, demo accounts are for learning a platform. They're not for learning how to trade. If you are moving onto a new platform and you don't really know, there's all these buttons and you don't know how it all works. You use a demo account to figure out how it works so that you know how to enter a market buy and a market sell and a stop loss. And once you know how the platform works, it's time to get off of paper trading. Demo account trading will never teach you how to trade, because how to trade is entirely revolved around how you manage your emotions and how you manage your risk. In a play money account, you can just always reload. There is no risk. So right there, it's tremendously different. And that's why I say to just take a very, very small amount of money. I can't reiterate this enough. Instead of trading play money, trade $1. Literally, like trade $5, trade $10, trade an amount where it makes you feel like it's play money, where you don't feel excited at all when the thing goes in profit because it's only a few cents. That's how you learn how to trade, is using a very small amount of money. And if you can make a demo account go up, well, that's a lot better than a lot of people. If you can do that, then apply it to a $1 account and tell yourself that you're going to 2x this dollar. And it doesn't matter. Don't focus on the dollar amount. Focus on the ROI. How long does it take you to 2x an account? To make an account go from $1 to $2. How long does that take you? It doesn't matter if you then, decide you want to increase, if you want to move up to $1,000 after that. You should be able to double that in roughly the same amount of time as you would a $1 account, because the liquidity, or nothing should really change from a $1 to $1,000, but the whole world changes from $0 to $1. So definitely, put in your account just such a small amount of money that it isn't play money, because that's really where you will start to, things should start to come to life. And if you do continue losing and losing and losing, just keep at it. And if you do decide that this isn't for you, then just dollar cost average. Anybody who dollar cost average into Bitcoin over the next 5 years, 10 years, is going to make a lot of money as far as I'm concerned. So there really is no reason to trade. If you're not going to devote, your mind, body, and soul to it, just dollar cost average. And if you do want to devote your mind, body, and soul to it, then start out with a very small nominal amount of money and just live, breathe, and die charts as much as possible. Okay, so thanks for your input again. And let's go ahead and that's another thing. I do see some good feedback. The one other thing to keep in mind is, if you can make money in a trending market, that's a lot different than making money in a ranging market. So pay attention to, if you are if you are losing money in certain types of markets, then figure out how to identify those markets and stay away as much as possible. Like, most trend traders are losing money in ranging markets, and therefore they need to figure out how to stay away, or how to really, really, really limit risk. So that's something to consider. And also think about how much a parabolic market changes from just a normal linear market. If you can make money in trends, and you can also make money in parabolic markets, then you're going to more than make up for the money you lose in ranges. And it can get frustrating if you're stuck in a range for months, or even look at the S&P for years. I mean, that thing has been super frustrating to trade. It's very, very frustrating. And that'll happen if you start, trying to trade, or trying to learn how to trade in an environment that is very unfavorable for what you're trying to do. You could go a very long time of just losing money with a very, sound and risk management technique and a sound trading technique, and you just lose money because you're in the wrong type of market. So that's something that's very, very important. Try to find trends that are strong, and try to find strong trends that are not yet exhausted. If you can do that, there's usually some good money to be made. All right, thanks again for chiming in. Let's go ahead and take a look. So we were focusing on this action in the Wyckoff chart, the prototype. So let's go back real quick and just make sure that we see that everything over here is there on the chart. So we start out with preliminary support, followed by selling climax, automatic reaction, secondary test, and then secondary test. And then after the secondary test, we start to get that creek, where it's just, and then after the creek is where you get the third, kind of like the third test of support. I don't really consider this, I mean, it is, but I always look for 3 tests of support or resistance in a horizontal range. When I see that, I start looking for Wyckoff patterns. And 1, 2, 3 is what I look for right here. So let's go ahead and take a look at the chart. Zoom in. Okay. So preliminary support, automatic reaction, selling climax, secondary test. They don't call it a tertiary test. They always call, like, even this test is secondary test, and then another secondary test, which is a little weird, but whatever. And then after the secondary test, we start to see the creek develop, where it's just, marked down in a tight range. And then it looks like we're, accelerate down, kind of, but boom, we find support. And this was put together yesterday morning, so there has been some changes, but it has basically followed along just how I'd like to see. So we will go ahead and look at an updated chart. So Jack, that is jump across the creek. And that's what we get right here with this creek moving on down, and boom, we jump across the creek. So now we look for point 11, point 12, point 13, and point 14. Let's just refresh our memory really quick. Jump across the creek, point 11, and then point 12. This is where it matters. This is where it really matters. And then point 13 and point 14 really matter as well. And all Wyckoff prototypes are using line charts, so I do find it a little bit easier to use line charts when identifying this pattern. And basically what I've been saying, I shared this with Murad yesterday, and we both agreed that if this thing finds support above 8,000, 8,050 is preferable, right in here, then it would be point number 12. So this is where we got to pay close attention to. This still can have a lower high than where the creek started, and I'm not sure if it should, but it definitely can. We see on point 11, this is a lower high from where the creek started, so it's still very iffy, and this is what's just so important to me, is point number 12. If we can develop this higher low, then it would look like we broke through that, the trend line I was originally drawing for the descending triangle, and it would look like we support on a throwback, and then it would really give us this nice last point of supply, which it's, so far so good, that's for sure. So now I do need my candles to just kind of see, and this is looking pretty darn good in terms of forming a higher low. I would want to do something like, we need a rectangle to include these closes and the wicks. Yeah, we don't need to take it all the way over, just right here. Is what I'm looking at. If we can turn this guy into support and start to kind of roll up, maybe get a Bill Williams fractal with a low in between two higher lows on each side, that's where it would really start to get interesting. If I see a Bill Williams fractal, that's the most objective thing that I can use to determine higher lows and lower highs. I might have already pulled that off my chart because I didn't think we would need it, and of course we do. So we can kind of see how well this works, as we're in a trend. Anytime we get a lower high, it's basically highlighted very nicely with this fractal. Lower high, lower high, lower high, lower high, fractal, 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 lower low, lower low, lower, looks like maybe a little bit of a fake out higher low, and there was another one of those right here. So, it's definitely not going to be perfect, but in general, and especially on higher time frames, let's go ahead and look at a weekly on some other pictures. Like right here, you see that, you can clearly see lower highs. which is the main reason I was bearish up in here. We're getting lower highs. I mean, it's that simple a lot of the times. If you have lower highs, it's bearish. If you have higher highs, it's bullish. And same can be said for the lows, right? And here we did have higher lows, so this is where it was important to kind of wait and see what took over, the lows or the highs, because if we continued, to make these higher lows inside of lower highs, that'd be a symmetrical triangle, and that could definitely, kind of break out to either side. But notice how the lower highs were accelerating much more than these higher lows were. So just a little side note there for if I'm wanting to be objective about spotting higher lows and lower highs, then I'm using these Williams fractals, just because they can really illustrate it very nicely. And super surprising to see this guy here. That's definitely one that my mind wouldn't see, and it's, barely counts. I wouldn't really want to count this at all. This isn't what I would consider a higher low. Maybe I could be proven wrong by the fractals in the long term. That's my subjective view, is that this isn't really a higher low. It's so, we didn't roll up at all. We just kind of got lucky to have this be a tick lower than this guy, and this guy be a little higher. So this one, yuck. But what I'd be looking for is one off of this one. As we come down into this guy, if we get a nice reversal candle, like a hammer or a dragonfly, then we have that followed by two higher lows. That would be higher lows in the candles, or the candles. The lowest low of the candle is higher than this low, and that falling one is higher than the previous one, like the 5 fingers. If we get that right here, that would really, really start to look like, to me, that 0.12 is in. And like I said, I am mostly inclined to say that this is, if I've got 100%, I would say that 60% is telling me this is Wyckoff accumulation, 30% is telling me it is a descending triangle, and maybe 10% for other. So we'll definitely be watching close. I mean, I had nothing bullish to say on the last podcast, except for maybe a short-term relief rally, and that's just a good example of why I love Wyckoff so much, because there will often be the case where there's just nothing bullish going on. Big sell-off followed by lower lows, lower highs, just everything looks really bad, and the Wyckoff can really help to navigate through some of these circumstances, where why it looks bad is because, it's probably whales, trapping out other people to gain liquidity for themselves, and that's exactly what Wyckoff talks a lot about. He talks a lot about whales shaking out weak hands before the big move happens, like right here. Boom, we take out this low, and boom, we get a nice move to the upside. Shake out, boom, move to the upside. This one not as much, but that's where this whole pattern can be the big shakeout before the move to the up. If everybody's looking at this as pretty darn bearish, which it sure, everything was looking that way to me, and then boom, we get this breakout to the upside. Something I'm really interested in is the strike rate of these patterns, because these patterns seem to be some of the most reliable patterns that I know. Is Wyckoff accumulation and distribution, but it would be hard to determine the strike rate, because that would be based on the person who's identifying them. Like, these things are so oftentimes subjective that it can be really hard. Like, one person may identify 10, accumulation or distribution patterns, and another person may disagree with every single one. So how do you figure out, you would have to figure out strike rate on a person by person basis, and that takes a long time. That means, like, out of the last year, I think I've identified 3 accumulation or distribution patterns, something along those lines, maybe 4. So 4 shots in a year, that does nothing to tell me what the actual strike rate is. It would be interesting if anybody knew, like there's a lot of research that goes into these. There's like a Wyckoff Institute, and if anybody is aware of some of the strike rate for some of the best of those guys, that would be super interesting for me to see, because I've been definitely very successful in using this pattern to help me identify significant tops and bottoms. Okay, so last thing we can do on this guy is look at volume. And we do see what we want to see, selling climax on big volume, preliminary supply, big volume, jump across the creek, significant volume, and we're not really getting any volume spikes up here at the top, which would identify distribution opposed to accumulation. If the volume spikes occur at the top of the pattern, that's way different than volume spikes occurring at the bottom. So this right here did really look like a descending triangle volume profile, but even more so, it looks like a Wyckoff accumulation volume profile, and it holds through all the way out, opposed to the descending triangle really stopped having that nice descending buying volume right in here. So all in all, I may bump it up to like 65% Wyckoff, 25% descending triangle, 10% other. That's what I would go with. This really is looking like a strong Wyckoff pattern to me, and the volume provides very important confirmation. Okie dokie, I will take a look at the chat, see if there's anything else to talk about. We do want to watch this 50 EMA that has been resistance. Seeing it try to turn into support here is interesting. I didn't think it would happen due to the distance of the 9. As we're trying to turn that into support, this 9 was still pretty far away, so this is the important area for me now. And this is one of the few times I will use 3 moving averages, and this is a good example of why. So it looks like we're breaking through the 50 and trying to turn it into support, but the confirmation comes from the shorter term moving average crossing over. And if we do fall back below, then you want to see the shorter term moving average turning into support. It's angled up strong, it's coming in for this buy signal. I only call it golden cross if it's higher time frame moving averages. I'd call this a buy signal, and it's coming in. So when we break down the 50, you do want to see this act as support, and it is sure doing its job. Wick here, fails to close below here, breaks it down here pretty significantly, but now boom, we're right back above and getting a nice reversal candle. So keep an eye on that. That would be also confirmation that this is a higher low. So say we get a Williams fractal under this candle, and then it's followed by 2 candles that are above it, one here and then one here, and then it's followed by a cross with the 9 and the 50 EMA. Now it's like everything is there for that higher low to say that it's in. And if it does break down from there, so be it. But you do have to do your best to figure out how am I going to identify these higher lows in real time before it really takes off and creates. Once it creates a new high above here, then it's obvious that it was a higher low. If this comes down and then creates a new high above here, it becomes pretty obvious. But if you can figure out before then objective ways to determine that a higher low is in, then you can get a much better risk reward by not buying the breakout but buying more consolidation. All right. This pattern reminds me of ETH BTC from December before the big break lower. Interesting. Not me. That one was a clear descending triangle to me, and I was labeling that in real time. That was just clear lower highs on clear decreasing volume. If we have time, I'll take a look. So when you're looking at volume, which indicator you're using, just the built-in volume right here. And it is important what exchange you use. I generally use the highest liquidity exchange. That's going to be the most telltale volume indicator. So that's generally why I'm charting on BitMEX, because it has much more volume than anywhere else. I'm buying this dip big with big leverage. All right, well, good luck to you. That is sounds like something that may or may not work out. I certainly hope you're doing that based on your own analysis, and That is nothing that I would recommend personally, but buying this dip is an interesting risk-reward setup. You know, if we do break down 8,000, like here, I'll just draw in a couple areas of support. If we break down 8,000, it's time to just let it go. And if it does hold, there's a lot of upside. I mean, the risk-reward from here is much better on the long side than the short side. But if it goes down, you know, 90% of the time from here, it doesn't matter which way the risk reward is better. I'm not saying that's the case. I actually do think it's going up here more than it's going down. But buying, you know, anywhere in here, there's a lot of reasons why I'm interested in that myself. And if I use leverage, I will ensure that it's not too much such that I would be concerned about getting liquidated at all. Anytime I use leverage, I first calculate my stop loss and I make sure that my leverage, the liquidation price, is below the stop loss if I'm long or above the stop loss if I'm short. And I just use leverage to decrease the amount of exchange risk that I have. If I have 5,000 that I'm wanting to long and I can do so with 10x leverage based on where my stop loss is. If my stop loss is at 5%, then 10x leverage liquidation will not be in danger. So I would have the option of sending 500 to an exchange and using 10x leverage to go ahead and open 5,000 worth of exposure, and then or I could do the same thing by sending 5,000 to the exchange and using no leverage. I would risk the same amount of money on the trade, but it would risk a different amount based on if the exchange, you know, something funky happened with some sort of really wacky ass wick that, you know, annihilated everybody, or if the exchange went insolvent or anything along those lines. Only having 500 on the exchange makes a whole lot of sense to me. Whereas most people, if they've got 5,000, they send that 5,000 to the exchange and 10x it for a $50,000 trade, and, you know, eventually lose all their money. So hopefully you are not going to be in that latter category, and best of luck with your trade. Okay, I definitely do want to take a look at the S&P, and then we can come back to Ethereum if there is time. Wow, we've already gone 45 minutes. Time is flying by today. Looking to buy more at 8,050-ish. Interesting. Yep, I would like to see the price support above 8,080. For me would be ideal. 8,050 is where it's starting to get a little shaky. 8,050 is where it's like, oh, this better find support now. And that, in those situations, risk in half. But you also may risk on missing out sometimes, which is good. You know, if you definitely risking missing out is much more preferable than increasing the, you know, getting a worse price and increasing your risk. So this S&P, like I said, has just been a gosh dang nightmare throughout all of this action. I mean, from, let's actually go a little wider time frame. From January of 2018 until now, we are like at the same price. And it's not like it just flatlined at the same price. No, it has had some, you know, significant moves that are really, you know, it's been really, really hard to trade this market. Really hard. And I can just kind of walk through a couple of things that I've done. Is that right here I did short. I called a top publicly on Twitter. I said this is the top of the stock market. We got a death cross in the 50 and 200 day moving averages for the first time since down in here. Only reason this wasn't the top in my opinion is because Trump got elected. So right here, called the top, went short, and was making a whole lot of money on that short. But I was not expecting support to be found here. I was waiting for this low to be taken out as kind of like confirmation of, oh yeah, this puppy is in a bear market, opposed to just maybe going to be trapped in a range. So went short there, but I think I lost money on the trade because I wasn't interested in taking profit down in here. Tyler literally bought the bottom. He went short and just caught this exact day on the bottom. It was so beautiful. I wasn't interested in that myself because to me this was really where it was ready to break down. And what I was kind of looking at was a new trend line here. So not only did I not cover here, I actually added on this bounce. Let's see, it's beginning of 2019. So yeah, like right here, what a perfect entry. It just absolutely did nothing. So I, got short up in here, didn't take profit here. I think I trimmed maybe a little here, but not much at all, if any. This is a while ago. And then I added right here, like this is just perfect. We got trend line, moving averages, throw back to the 200 EMA on the 4 hour, boom. Let's sell that sucker. And it was also prior horizontal. I mean, it was just perfect. And then what happens is goes right through. And now I get stopped out up in here. And that basically, maybe this was around break even and this lost. So lost money there, and then have continued to struggle in, let's see here. So was able to get long in here. But again, when we created these new highs, I'm expecting the market to take off, and instead it pulls back sharply in a big way. So I did finally smarten up in here and take some profit at that new high, but this has just been really hard to trade. And now, look at this. What were we talking about earlier? If you get a lower high, that it's, one of the most bearish thing, one of the most important indicators for me are higher lows and higher highs versus lower highs and lower lows. And this is the first time. See, every other time throughout here, we create a higher high above here before selling off. Right here, it's barely, but we can see that it is, meaning that the supply isn't like moving down, meaning that bears aren't really starting to, get over anxious about selling this. We get a new high here. Barely, but it does break through, okay, which is important. And then here, significant higher high with this huge, massive cup and handle, and that confirmed. And then here we get a higher low, this sell-off, so we confirm this cup and handle, but we fall back below the boundary line and appear to turn it into resistance. It was getting scary. But most important to me is that we put in a higher low. Higher high, higher low, right? And now, what do we see for the very first time? We got a lower high. And have already come all the way back like this. Here we got, a nice higher low. Here, these last couple days, this action here came all the way down. It caused me to exit all my exposure on this candle right here. When we broke down this support, that's where I would want to see the higher low come in, is prior horizontal resistance turned into support, giving us a higher low. That's how linear markets generally work. You break through horizontal resistance, you create a new high, and then you come back to test prior resistance for support, and if it holds, you get a higher low. Here, I had my stop set back in here, and then as soon as I got stopped out, boom, the market just turns right around, and it's like, geez Louise, what in the world did we get a higher low here? And that's where I would have, I thought that we did right here, and we still may have, because look at what we got. That beautiful fractal. That sure, it isn't higher than these, but what we're looking at is this guy. Obviously, we're not looking at a higher low above this, or even this. Actually, this was what I was using to set my stop loss, was this fractal right here. So we get this higher low on a reversal candle, and it really looked like, okay, now are we going to just go ahead and take off? Tony and I did a show, and he really thought so. I was more trepidatious myself, probably because I had just recently gotten stopped out. But these last 2 days, now it's like, holy cow, instead of taking off of this fractal, we are coming back down to retest, and I don't see why this would hold. If we do take out this low right here, 2857 is the number to watch. If we take out that low, then our only chance would be like a double bottom, and a double bottom with this lower high would, in my mind, be most likely to lead to another lower high. The double bottoms that lead to higher highs don't have such a significant amplitude in the middle. It would be like a big W. It fakes out as a lower high, and then finds double bottom support, and then takes off, and that's a very bullish pattern. Whereas something that's like maybe a capital W, something like that, if it does continue coming back to support, then I'm going to be thinking that that's most likely. So we'll be keeping a very close eye. I mean, a lot of these markets are really in very interesting spots, including gold. So we'll take a quick look at that and not get into Ethereum today. Let's see what we got. I want to take a look at a potential rising wedge. It's not there. First I thought it may be, it's not. But what we could say is that we're in a symmetrical triangle, which I really don't like symmetrical triangles, and I really do shy away from them. But if we have clearly defined lower highs and clearly defined higher lows, that's a symmetrical triangle that those boundary lines are likely going to be quite important. So here we just draw two trend lines connecting the lower high with the higher low, and that gives us this symmetrical triangle, which I am comfortable labeling this as a symmetrical triangle, even though I don't like those patterns. I really shy away from them. This looks like a pretty, objectively drawn symmetrical triangle that, maybe can be adjusted like this. We'll have to keep that in mind. But for now, it looks, pretty darn clean to me. And if we do break down, this kind of shows if we do get this double bottom, it would be breaking down this, the bottom of this line. And if it does, you could use that to measure a target. Let's go ahead and get into gold. I wonder if I have a chart up. I don't. Ooh, let's take a look at the weekly Peterbolic. That can help identify major reversal points. Interesting. What do we have here? Sell trigger. And we would expect these to basically be providing very bad signals as long as we're stuck in a range, and that's exactly what it's doing. Sell trigger down here at the bottom, buy trigger here at the top, sell trigger. If this isn't at the bottom, if we take out this low, that's where it can be a good idea to potentially, add extra confirmation. And I'm definitely tweaking this thing myself and really excited about how the adjustments that I'm going to be making, which will keep me out of these whipsaw type of moves, or it will at least make it such that my position is really small. And here we do see that every time we did get a bad signal, that the low of this candle wasn't then taken out. The high of this candle, was it taken out? Let's see, high 3020.7, high 3022. So this one was right here, so that would be tricky. So right here, I'll definitely be watching for this to get taken out in a significant way. Like this is, not very significant. It may feel like it on the day of, but here, if we get this long wick and then we break it down, that would turn this into a very bearish candle. I know that Tone was interpreting this as very bullish, and I'm not convinced because it is red. It is, has some properties of a hanging man. It's following this fractal here, where it's like, this really looks like we've rolled over, and breaking above the higher of the low of this candle will be very important. So I will be watching 2857 and like 2992. And it is interesting to see that we do have a sell trigger. We'll watch to see, what happens if we're able to take out that low. And I wonder how this has been doing throughout this range, because I know that it, this isn't where I would expect it to be doing good, is what I'll say. And doesn't do good here. Doesn't do good here. Doesn't do good here. Here we get a decent basically what would be a break-even trade. Finally, you get a profitable move that would be stopped out right here is where the trigger, you don't wait for that close. And then, so here it starts working once we get these nice kind of moves is long here, short here, and cover the long, hold that all the way down to here where you cover the short and go long, hold that all the way up to here where you cover that long and go short, and now start to get whipsawed again. But just notice how when you get these moves that work out, like this one goes from 25.30 up to 28, so $300 move in your favor. Similar here, $300 move. And then when it doesn't go in your favor, what happens? So right here, it doesn't work out in our favor. We get in 28.20, we get out at 29.20. So that's like, 1 to 3 on a risk versus reward. And then here's probably going to be even better as we get tighter and tighter and tighter stuck into this range. We get more chop, but if it happens more often, it probably means that it's less severe. So here we sell 29.14 by 29.90, so like $70 loss. And this is comparing risk reward to when we're still in the range. Like this isn't really a trend, like this is for the stock market, that is not a trend. Let's look back at when this thing was trending. Now you're getting, buy, sell, here's a trend, buying here around 24.75, getting out 27.56. So I guess, $300 move using the Peter Bollocks on the weekly is a very good move. So that is interesting to see that it was, if this is the first time you started trading it here from January of 18 through July of 18, you take 6 months to trade this thing, you'd think this is the biggest piece of crap around. You just, sold every bottom and bought every top. That would get very, very frustrating, but that's where I am a big proponent of, testing out on lower time frames, because something like this will happen in the matter of hours instead of the matter of months. Okay, we're basically out of time, but I do want to look at gold, because as we've been getting some head fakes in the stock market, gold has been getting quite interesting as well. And it's interesting to see how the Peter Bollock, this move, I captured basically the exact same move using different methods, using my my version of Consensio, and then the Lucid SAR basically got me in and out at about the same exact price. So that's really interesting to see, and definitely something I like to see. Seeing a bit of a falling wedge in gold, which I'm really interested in. Make sure I can remember how I was drawing that. This is on the daily, it is. So when I was on Tone's show, he mentioned that he doesn't like wedges at all, rising or falling, and I definitely disagree. I love wedges. I mean, I really, really like wedges, and I like them for a number of reasons. One, they can be a really good reversal signal, and two, I'm of the opinion that they can be traded both ways. Basically, a falling wedge is a bullish pattern where you would expect to go ahead and buy if we broke through the top boundary here. That would be your buy signal. But what I've noticed is that you can also trade it to the other side. If we break down the bottom of this boundary, that's like quite bearish. If you form a bullish pattern and then break it in the other direction, that's quite bearish. Same could pretty much be said about descending triangles, where it's a bearish pattern, but not 100% of them break down, right? There's some percentage of them that break the trend line. When we go to descending triangle like this, there's some that break through up here. That just tells you that there's so much demand at the horizontal area of support that it wore through that resistance. And now all these people that were selling every bounce down, they're scrambling to either cover shorts or buy back, whatever the case may be. So if you break a bearish pattern to the upside is really bullish. If you break a bullish pattern to the downside, it's really bearish. So if we do break this to the downside, I would be looking for like a head and a shoulder to form, which would be freaking ugly. I do not want to see that. I definitely want to see us finding support above 1400. You know, I was ready for a correction, and I am now liking that we see this bullish falling wedge kind of combined with the stock market showing looking rather shaky, and that's what you'd want to see out of gold, is that it is ready to really take off. And I will be paying close attention to this falling wedge that really we want to confirm with volume. We want to see volume go down as price goes down and volume go up as price goes up. The ICE exchange isn't going to give us volume. Let's try Oanda. Okay. And sure, a lot of volume. And it's interesting that the selling volume is definitely decreasing. Buying volume is not really going anywhere. That's a pretty bullish volume profile, if you ask me. I could see somebody making a different interpretation, and I wouldn't be mad, because you really want to see these spikes in here, and then you want to see people not really interested in it selling as price comes down. And there are definitely some interested sellers, but it seems to me like the buyers are more interested, especially as of late. So we'll hope for this thing to continue cooling down. Let's just check how far away we are from the moving averages. Interesting. Yeah, this thing may not need to continue cooling down at all. It may want to actually make a move here sooner rather than later, so it doesn't get a bearish cross with the 9 EMA. And then also reminds me of probably the most important thing, I'm surprised I forgot to look, at least for me, is what's recently happened with the moving averages. So I was really wanting to be out, and I was glad where I did get out, because we broke the weekly parabolic SAR, and that was followed by a death cross with the 50 and 200 EMAs on the 4-hour chart. So right here, it was really looking like this thing's ready to go retest 1400. Instead, what happened? We found support and quickly bounced back above, and now it's been fighting right around here. So right here, it's neutral. When there's no spread in the moving averages, it's very neutral and indicates that we're in a range. And if we break through the top of this boundary, we should start to get some spread in the moving averages, and that would be really a bullish setup of failing to maintain a death cross, quickly getting back above and keeping a golden cross, forming a bullish pattern in this falling wedge that you can't really see on the 4-hour, but on the daily we certainly do. And yeah, so if it could break the top of this boundary, it would be looking pretty darn ready for another leg up. And that has changed very quickly. Just like the stock market changed very quickly, so has this chart for me. And that is in large part due to these moving averages recrossing in such a nice manner. So just because I want to, I'm going to take a quick look at silver. And we do see it lagging a little bit behind gold in terms of, this was the sell signal on silver right here. And this is a good illustration of why I love to use these moving averages the way that I do, is that right here, if we are wrong, we did sell resistance, like this is resistance. And if we are wrong, then these moving averages crossing back over will get us out at a nominal loss. If these moving averages do recross and the price is up in here and we're selling down in here, that is going to be a very small loss in relation to the potential reward. So yeah, silver isn't looking quite as good. And geez, I need to get this out of here. Instead of forming any sort of falling wedge, well, let's look at the daily. This is much more of a bear channel than a falling wedge as far as I'm concerned. Almost could make the argument that it's starting to fall as well, but to me this isn't nearly as bullish as gold, which is basically what I would expect. That's what I've been expecting to see all throughout, but it could change quick. Pulling back and into a golden cross with the 50 and 200 week moving averages would be very bullish. And if it could support above 1673 for another month or two, we should get that golden cross. And that is where I got really excited about gold when it got that golden cross. And I would have no reason not to feel the same about silver. Let's look at XAU, XAG real quickly. So it looks like there's a little correction in terms of gold had been just crushing it against silver, and silver out-returned gold there for a couple months, which brought it back down to this 200-week moving average. Will be interesting to see if it finds support there. Somebody mentioned to me a recent death cross, which I didn't know, so I appreciate that. This is interesting. So we did get a death cross here, pull up and into, and now is resisting. And a lot of people may be wondering, where this can be traded, if it can be traded, or what's the point in looking at this chart? And it is a pair on Oanda, which is my preferred forex exchange in terms of a place in America to trade forex. Oanda is a really good option, and even if you're not looking to trade this pair, it's a good chart to look at, because if you're looking at longing gold and or silver, you want to know which one is doing better. Like all throughout here, I wanted to be long gold and forget about silver, or have a very, very small portion of my precious metal allocation into silver, because gold is bullish over silver. If that changes, if silver pulls back into a golden cross up the 50 and 200 week exponential moving averages, and it starts out returning gold, which would be shown in this chart by a reversal, and this reversal is the first signs are there right here, then it would be time to really scale. If both remain bullish and you're still looking at buying either gold or silver, and this chart turns bearish, then it would be time to really increase the exposure to silver and decrease the exposure to gold. And I have a hard time believing that this is more than just a small pullback. We'll see if it can maintain this death cross. If it does, I'll have to change my tune. But as it stands right now, I kind of think we're going to see the same thing we just saw in gold on the 4-hour, where we get back above and refuse to maintain that. And the reason I'm saying that is just kind of the angle of this doesn't really look sustainable to me. It looks like we already have broken that channel. Look at that sharp move down. That is a big move down that just doesn't look sustainable to me. So being that we've already broken through the top of this channel and we're back retesting these moving averages, I think it's going to have a hard time sustaining. And when it comes to gold or silver, I much prefer gold, so I kind of want this to be staying bullish as much as possible. Okay, that is that. I will take another drink of water and a last look at chat and then call it a day. Let's see here. Any views on the ADX and DI for BTC on the 4-hour? Saying that it's crossing 20. Let's go ahead and just take a quick look. My view is that when we're in a significant range, a prolonged range like we have been, then we don't want to be paying attention to lower time frame ADXs, because they're probably going to be pretty choppy as well. Okay, that's interesting. Very interesting to see. I didn't realize that this was rolling over on the daily. That provides some pretty good, that's pretty bullish. When this rolls over here up in this range, it kind of tells us that the move is exhausted. Not kind of, it does. That's what this indicates up here is an exhausted move. The move was a bearish move. So if we have an exhausted bearish move and a potential bullish accumulation pattern, something to pay attention to. So yeah, you're probably right that this isn't a long enough range for the daily ADX, because clearly this has been trending the whole time and has only now become exhausted. So 4-hour could be a good place. I'm inclined to think maybe a 12-hour would be a way to go. Okay, so here we do have ADX crossing 20, but we need a spread in the DIs, which we're not getting. The plus, like right here, this is interesting, and is a different picture than what we're looking at on traditional volume. It really looked like, this move was on significant volume, whereas the buying pressure compared to the selling pressure on the ADX is not showing the same picture. These are still very, very close and still very much indicates a ranging market. Even though the ADX is crossing 20, we need the buyers or the sellers to take control, or else we're just going to stay stuck in a range. And just look how different of a picture it is from the last time we crossed 20 up in here. We've got the sellers increasing, supply is increasing, demand is decreasing. And here we've got demand decreasing and supply increasing. So people are selling this bounce and losing interest in buying it. So that is interesting. I'm glad you told me or asked me to bring that up. And it does look like this 4-hour has certainly been doing very good. Right here, this was a significant move. I actually bought that move, I think. Nope, I bought this move. Glad to see that I didn't go against ADX. But right here, this was a pretty significant move. Again, some sort of like trend line break right here that had a lot of people interested. Even if you drew it all the way up here, you're still breaking through, maybe throwing back, holding as support, and it may really look like we're ready for a bounce off of this bottom here, but the ADX falling below 20 says nope, we're in a range. And sure enough, once you see that, you would want to draw some horizontals and say that it's going to have a hard time making it through those horizontals. So the 4-hour does look like to be a very important time frame for the ADX based on this recent action, but this crossing 20 isn't as you have to wait basically at this point. For me, I would be waiting for the DIs to move in my favor. Right now, sell pressure is increasing and buy pressure is decreasing. I do not want to see that moving against the price. If price goes up and demand goes down and supply goes up, that is quite bearish. So a lot of things to take into account. These can change in a blink of an eye. I'm saying that this is, if anything, bullish, but it's time to wait and wait for some sort of spread to occur before I would have any confidence in a trend starting here. We'll just take a quick look at the 12-hour because that's what I like to do. Looks to be flattening out, maybe creating a higher low. That's interesting. Still bearish, and here we do see again that sell has kind of started to turn up and the buys kind of started to turn down. Yeah, so that's interesting. Definitely something to keep an eye on. Okay, I think that's going to do it. Oh, nice. Fibbo Swanee gave a shout out on a recent video, said that fibs match up with the Wyckoff. That's good to hear. I'll definitely have to take a look at that. I've never really thought about combining Wyckoff with fibs, but that does make a whole lot of sense. So I appreciate that. Getting some good questions, so I guess I'll just keep it up. I've got 15 minutes until it's time to head for my hot springs meditation session, so I can go ahead and field some more questions. Let's see here. Alpy88 says, compare June 5th to 10th, 2019 price action to this dip on the 4 hour. So June 5th, let's see, right here. Okay, we can compare it. I'm inclined to say that I don't want to use that as a comparison since one followed an upswing, but I don't think that's enough reason to fully disregard it. To me, it's like kind of the upside down version, right? Where this, you got the, let's see, preliminary, shoot, I remember, but this kind of, you get this spike up and then this another higher high where it's like a buying climax. Looks like the inverse of this to me right here, but we'll go ahead and do a little like, so what do you say, June 5th? Oh yeah, this is definitely one that I was looking at as Wyckoff accumulation in real time, and I think I mentioned that on the last show. Gave myself a little pat on the back for buying this. So okay, yeah, let's take a look. I'm going to go June 3rd just to kind of keep in this little sell-off here. And then we'll go until here. So this is a really good example of a accumulation, and the right here is what we're looking for right now. This higher low that follows and gives us kind of point number 12 right here. I would have wanted to see it right here, but still, as long as it's a higher low and it doesn't return to that horizontal support, that's really where this pattern becomes very, very interesting. Okay, so we did a bars pattern so that we can just draw this over here and compare. Maybe I should have did it as he said. I will go back and do that over, starting with the 5th. And then I think he said to the 10th. Okay, yeah, right there. Definitely see a lot of similarities. We may need to expand this a little bit. Let's see how we want this best suited. Yep, that's definitely showing a lot of similarities. Depending on the zoom, I can't quite get it just right, but we do see this, beautiful creek, and then the jump of the creek following this real choppy sort of double bottomy type action with the lower low. So let's just not have it over the price, and I think we'll be able to fare it better. I might end up tweeting this out, so thank you. Was that Alpi who asked that question? Yep, thank you, because this definitely does have a number of similarities where you get the lower low right here, and then the nice bounce back above this area of resistance here, and then the creek, and then the jump of the creek. You want to see that, quick, fast, hard, sharp, like we got here. This was even better. And then the higher low. So yeah, this is definitely where things get interesting for this pattern. And if it can create a higher low, that's why I wanted to know, man, what's the strike rate of these things? Because when this higher low gets put in, it just seems like a really good strike rate. So yeah, a lot of similarities there. Let's see here. Dan N asks, if you were to chase an asset that has been beat up, pullback of say 20 to 30%, how would you trade something like that? Example MO. Well, that's something that basically I can show you here. I do have an article on TradingView. I think it's two-parter for how to buy the dip. And let's go ahead. If you click on any of my articles here, and you come down, click on how to buy the dip. This outlines my exact strategy in terms of, I don't really care if it's down 20 or 30% per se. What I care about is where are the moving averages. and where are the horizontal support? Is there a trend line? And then having an exact stop loss strategy that is very objective is very, very important, because if you're in love with an asset and you're waiting for a pullback and you finally get a 20-30% pullback, that could just be the start of the bear market. And that's where people get in trouble, is that they're too in love with something, and the cheaper it gets, they just buy more and more and more, and that's where people really got in trouble in, somewhere in like 2018 or any bear market. And that's the key, is to how to distinguish between reversals versus pullbacks. And I can show you on Bitcoin how I went about it real quickly, because I do have a pretty simple method. As long as price was supporting the 200 EMA, that's a buy and that's a pullback. And once you get a death cross, that's a reversal. So if you're buying these 200 moving average pullbacks, and then you're exiting on this, which I actually did a little better, I was able to identify this kind of blow off top right in here as a correction that I wanted to sell. I did post on TradingView, I think, like an A, B, C, that you don't sell the A, you sell the B. So I was front running my strategy a little bit because of outside circumstances. But in this situation, I am viewing it as a pullback. Anytime we have a golden cross and the price is supporting above the 200 EMA, I am viewing it as a reversal when we get a death cross with the 50 and 200 EMAs, and I am confirming that with a weekly parabolic SAR. So this one did work out nice, where we got the death cross with the EMAs right around when we got the reversal of the parabolic SAR. So for me, that's how I go about buying dips and distinguishing between dips and reversals. Could you add TI onto the chart of BTC? I don't really see a need to. We did get close to a 9, I think, on that last sell-off on the 4-hour. Yeah, this is a good thing to know that we're 7 on the weekly. That is definitely good to know. It would be interesting to see if we do get to a 9. And let's just take a look at a couple other time frames. Chop doesn't work. That was a 9 that turned into a 1. So yeah, I was definitely watching this last night as we were, was that 2 nights ago? 2 nights ago, as we were at horizontal support, trend support, bottom of this channel, and on an 8. That was really a nice setup there. And yeah, so cool to see that bounce there. Don't see anything else to look at on the TD, so I will remove that. And appreciate the questions. I am talking. Okay. Okay. In my opinion, medium or long-term trade is always better and profitable than short-term or scalping trade. Anyone agree with me? Thanks for the input and question, Praetino. That's a hard name for me to pronounce. Praetino. It's good that you have an opinion, and for you, medium and long-term trade works better. It doesn't matter what anybody else thinks. If nobody else agrees with you, who cares? Screw them. Like, there's definitely people, absolutely, who make a lot, who for them make more money short-term trading or scalping. Like, there are some people who that's their bread and butter. That's how they make all their money, and they would disagree with you. But that doesn't matter, because if for you, medium and long-term trading works better, then great. One of the hardest parts about trading is starting to trade is picking out a time frame. A lot of new traders, they want to trade the 5-minute, they want to trade the 15-minute, they want to trade the hour, the 4-hour, the daily. It doesn't matter. Wherever there's a signal, they're going to take it. And when you can really start to establish a trading process is when you have a system and you have a time frame. So find a system that you like, and then go with the time frames that work best for you. And I agree. I mean, I trade much higher time frames than most. Even though I use the 4-hour, I'm using the long-term moving averages on the 4-hour such that it lines up with the weekly signals that I'm looking for. So in reality, when I'm looking at this 4-hour chart, I'm really using a time horizon more like somebody who's trading on a weekly chart. And that's where you see, the crossovers line up with the SAR reversals and that sort of thing. If I'm using the 4-hour and somebody else is using the weekly SAR and we're getting in and out around the same place, well, I'm more trading the weekly than I am the 4-hour. And I don't like scalping. I mean, I don't like day trading, sitting around all day, every day, making 50 trades and trying to average like a 0.5% return on your roll a day. I mean, that's an incredible average. If you average 0.5% on your roll as a scalper every day, you're going to make all the money in a few years. Like, that's a tremendous rate of return to average a 0.5% a day. And you probably have to make 20 trades to do that, and you got to be at your chair 14 hours a day, 6 days a week or something like that. And that's something that really just does not appeal to me nearly as much as something like trading a weekly chart or a higher time frame indicator on a 4-hour chart or something along those lines. So it's good that you have recognized what is working best for you, but don't worry so much about what's working for other people. Focus on what's working for you, because there are different strokes for different folks. Some people will do really well on the short-term stuff, and that just shouldn't necessarily have much effect on you unless they're directly teaching you how they're doing it. Then maybe go with something like that. So okay, starting to ramble a little bit and have gone on longer than I wanted, but that, I guess, will make up a little bit for not having a show yesterday. And I do appreciate everybody for sticking through. Still over a couple hundred people watching. A hour and a half long show of listening to me blabber by myself. I really appreciate you guys for hanging in and for smashing that thumbs up button. If you haven't already, click the subscribe and let your friends and family, anybody who you think may be interested in this show, I'd appreciate it if you pass the word along. And with that being said, it's time for me to head out for my daily hot springs meditation session. So thank you all, and I will plan on not likely being able to do a show tomorrow, but will do my best on Thursday. As I do get close to leaving for Bali, I need to make sure that all my ducks are in a row, and that will have precedence over doing a podcast. And the Cardinals are playing their elimination game tomorrow, so I will be watching that. Anybody out there who is rooting for them, I am cheers to you, and I will be thinking about everybody who has been sending me messages saying that they're also Cardinals fans. It's neat to know that there is some people out there who are as interested as I am in these playoffs. So thanks again for tuning in, and I will catch you on Thursday if it is at all possible.